Welcome to EI's Navigator, the podcast for UK venture capital. I'm your host, Brian Moretta. Manufacturing is a relatively niche area within venture capital, but geopolitics are changing the landscape and raising its importance. Deep maketech investor Everquest specialises in this area, and we have two of its partners on today's podcast to discuss investing in that space. As usual, this is for informational purposes only and is not an offer for any financial product or security. See the show notes for a full disclaimer. If you're enjoying the podcast, don't forget you can subscribe through all good podcast services or players, or follow the link in the show notes. Without any further ado, enjoy the conversation with Hannah and Stephane. So, I'd like to welcome to the podcast today Stephane Mery and Hannah Wade, who are both partners at Everquest Capital Partners. Welcome to the podcast.
Hi, Brian. Thanks for inviting us.
Thank you, Brian.
Pleasure. As usual, I'd like to start by getting into a little bit more about you, because can you tell me maybe briefly sort of who you are and why we've invited you on?
But thank you very much for this invitation, Brian. So we are a venture capital fund called Everquest Capital. We started the operation formally as Everquest a year ago, but we've been operating as a team for the last 4 years. I joined the group 4 years ago, which was led at the time by Hannah at CPI, the Center for Process Innovation. Hannah, if you want to say a few words about
Yep, thanks, Stephane. So, Brian, I've been working with Stephane now for the best part of 5 years, and I'm really lucky that I work in an ecosystem with lots of bright, enthusiastic entrepreneurs in it. I have the pleasure of working with Stephane to look at all these bright and interesting spinouts and startups, and I'm absolutely passionate about their entrepreneurial journey and seeing some of the amazing things that they're working on actually becoming commercial reality. So it's never a dull moment. I'm out of bed in the morning looking at one thing. It could be a medical device right through to recycling batteries. It's great to be here to talk more around our passions about supporting entrepreneurship and some of the great companies that we've invested in over the past 5 years.
Great. So you mentioned there about a partnership with CPI, and I think it's probably worth introducing who CPI are, because I think that's very important to where you come from.
Yeah, I'd be happy to. It brings a real unique dimension to what we're doing at Everquest. So the strategic partnership with CPI enables us to really catalyse a network of scientists, engineers and business people that are able to support early stage proof of concept technologies right through to commercialisation. We have 6 best-in-class national centres across CPI located in the North East and Scotland. And CPI have also generated a number of strategic partnerships with large corporates like GSK, Unilever and Rolls-Royce over their 20-year history of supporting companies to be able to scale up their processes and products in life sciences and materials. The partnership's really synergistic because Everquest brings the financial and investment expertise and pairs it alongside the technology and market expertise with CPI. And that's really enabled us to be able to pick the best and brightest spin-outs coming out of universities, and also to be more than just an investor, be a value-adding investor that can provide access to a range of partners in our network and equally to those important innovation assets and expertise that allow entrepreneurs the extra support that they need to take their scale-up challenges from that proof of concept stage right to commercial production.
So we'll maybe come back to CPI in a little bit, I think, because I think we'll refer to that. But where I really want to start is you talk about investing in deep maketech. I'm going to try and get that right. And it's a phrase that was new to me. And if it's new to me, it's probably new to a lot of people. Do you want to tell me what deep maketech actually is?
So it's a term we dub for all the combination of advanced process, material and design. It's basically any technologies that are making things, hence the term. And it comes from designing new prototype to scale up manufacturing to recycling. So the cradle to grave of the supply chain, that's what it's all about.
Okay. And the deep tech presumably is some sort of scientific technology angle, is it?
Yeah, deep tech is a term which has been used in the past to characterize any technologies that are very tech oriented effectively. So we are applying this to the technologies of making at large.
Yeah, which an area that I think is probably underserved, I think, by venture capital.
Absolutely right. And even more so that the world is now entering into a very different type of economy from where it was 5 years ago. So 5 years ago, we were all talking about happy globalization. Then COVID arrived, as well as a reshuffle in China.
Mm-hmm.
A political transformation whereby China went from this happy globalization to what we call war economy, whereby every country is now trying to control the bottlenecks of the supply chain.
Mm-hmm.
So it becomes extremely important now to invest and develop technologies in what we call a deep maketech, precisely to give countries, especially the UK, an opportunity to repatriate some of its manufacturing production capabilities, as well as the ability to design and develop new things.
Sorry. And is that something where you see new technology in particular being important about? Because I think a lot of people have this idea that in some sense there's a factory in China and you're going to build the same thing in the UK or wherever and kind of replace that factory in China. I think that's what people think reshoring is.
Exactly right. So if this is what it's all about, there's no point doing it. We will never do as well as the Chinese.
Mm-hmm.
Why? Because Europe and the UK in particular are plagued with high energy costs. And until this is sorted, and obviously the war with Ukraine has not make things any easier.
Mm-hmm.
But until we've got access to cheap energy, we will never be able to compete in the same way with the Chinese. So we need to transform the way we're doing things by inventing new process, new design, new materials, and developing this deep maketech sector that we're talking about.
Is that political background actually having an effect on the ground? I mean, we hear about this conceptually as this sort of high thing, and to me it feels like something that's we read about in the news and the papers, and presidents and prime ministers talk about it. But is this something that we're actually seeing have a real effect down at sort of new company or small company level?
We are, and this is where the partnership with CPI is so important, because CPI is leading that front, having been for 20 years now developing expertise in new process innovation.
Uh-huh.
CPI is able to nurture and identify the most promising technologies in that field effectively. So I'm going to let Hannah talk about this, because obviously she is leading the charge there, but there are an incredible number of new technologies coming out of universities, partly fueled by AI, but not just. The UK has always been very innovative in that field.
Yeah, and I think the UK has been strong at innovation, perhaps always not the best at commercializing or making successful companies out of it.
Exactly. This is where a lot of companies need to go to CPI to go from the bench to bringing that technologies into commercialization. And CPI has all the tools to do that. Hannah, do you want to talk about the ability of CPI to...
Yeah, I think that's a really good point to come in around the Catapult Network. So CPI is part of the high value manufacturing Catapult, and equally the high value.
Which is what?
Well, that's a really good question, Brian, because those of us who may have heard of different things like the Fraunhofer Institute in Germany, basically the Catapult Network is the UK's version of that. And what it seeks to do is it seeks to address that really difficult stage between proof of concept and commercialization that we refer to as scale up. So there's an element of the invention space that the universities are great at. We've got lots of blue sky research, but then we get to a point where you need to make tens of hundreds of to be able to get to that commercialization point.
Is that the idea of you building sort of the small scale, let's try it and let's see if people will actually buy it? Is that the kind of idea, or is this actually proper manufacturing?
It's getting to that point of proper manufacturing. The bit that we get really involved in and really excited about is actually the boring bit. So it's around consistency. making sure that the regulation's taken care of, because there's that element of being inventive in the lab, but at some point you need to come out of the lab and you need to scale it in a consistent and compliant manner. You need the quality systems around that, and what might work once might not work 10 times or 20 times or 100 times. So really it's about that basic principles of taking something from a small scale and putting the consistency and the process around it to be able to make it at scale, economically, and in a way that it's commercially viable for that particular market with a quality standard. So it really is referred to as the valley of death, because it gets very expensive and very difficult once you start getting out of that proof of concept stage and having to show the rigor behind what you've produced in the lab and getting it up to something that's an economically viable product.
And to what extent, I mean, you mentioned a lot of this as spin-outs are coming out from university technology. In your experience, what are the challenges of where you have academics in particular who are intensely smart in one sphere, and as someone who's got one foot in the academic domain, but perhaps not always as knowledgeable in other areas? They may not be as commercial. The whole thing about manufacturing and process might be alien to a lot of these people.
Without wanting to stereotype it, it comes into a place of what you're looking for in a management team. I think what we're always acutely aware of is you want to see commitment and you want to see self-awareness in terms of what your strengths are. So the best founding teams that we see and invest in are those who understand what they bring to the table and what they offer in that journey. And it has to be backed up by absolute relentless commitment that we see from the founding team. So sometimes we will see academics who don't want to take the research forward, and they're actually aware enough to put in place a CEO to move through the commercialization stages. So I'd say, without wanting to stereotype, it really is around that self-awareness that the founding team have, and whether they've got the right mix of skills to take something through to commercialization. I mean, Stephane, you've seen plenty of founding teams. What would you say about those that have been particularly successful?
The one that don't take no for an answer to start with.
Yeah.
Especially when it comes to hitting problem with the technology development as well as commercial development. So it's really those who are the most hungry that usually succeed. But in terms of what we're seeing, so our business model, our investment model, we'll probably talk about this a bit later, is really based around working with the best customers or potential customers of CPI. And the reason why we devised that investment strategy is because there's no better way to do due diligence than to work with the companies. Investing in companies that have been working with CPI for 6 months or so is just amazing, because the feedback from CPI about the team, about the technology, about the next step is second to none effectively. That's why working with in this way gives us a very beautifully curated deal flow.
Yeah, because I think one of the concerns where I think we get scientific sort of things in particular, and prior to commercialization is, in essence, is the technology any good, and is it actually commercial? And I think those are two questions for an investor that are quite hard to sort of assess unless you have some sort of specialist knowledge in that area.
Exactly right. I mean, I think one of the biggest mistakes investors can make is to invest in a technology looking for a market. Because, sometimes it happens, but most of the time it doesn't. Again, the beauty of working with CPI in our case is that CPI has their finger on the pulse of the deep maketech. So they've been working with the largest corporation, JV with some of them, and with obviously the other scale, the early stage companies. Having this breadth of understanding of what's going on in the market is a great observation post to make sure that whichever technologies we're looking at will indeed go somewhere, because there is a need in the market for those.
So one of the things you as a company focus on, you focus on 3 areas, which is sort of new processes, materials, and designs. And I was just wondering, how did you come to those as the areas of focus? Because, are these sort of things that you're seeing in the market as gaps, or are these some things where you see as the expertise within your team?
It's the combination of the three that makes the deep maketech.
Uh-huh.
And it happens that CPI is an expert in all three areas. So if you like, we partner with CPI and de facto we're investing into the forte of CPI, which is effectively in these three areas, which in turn is the bricks to really invest into the best reindustrialization tactics, if you like, in the UK. So all of these components come together beautifully.
So maybe you want to give because I think new process materials design sounds very nice and abstract. Do you maybe want to give an example or two of what that actually means in practice? Because
Sure, we can talk about some of the investment we've made. Hannah, do you want to talk about?
I think possibly the Des Cycle story brings to life like the role of CPI within that and how it developed from an initial investment into the place where they are today, having just secured their Series A investment. So Des Cycle is effectively a spin-out. It was some IP from Leicester University that a team looked to spin out of the university and scale up. And when they came to us, they were quite early in their journey. They were looking at around that proof of concept stage. And one of the technical challenges that they had was...
Well, what do they do?
Good question. So the technology is basically a solvent that dissolves electronic waste and then recovers critical minerals from the solution. So you're effectively dissolving PCB boards in a solution, recovering the critical minerals, essentially gold, as a priority out of the solution, and then being able to resell that onto the market. And to be able to demonstrate that that was commercially viable, they needed to do a number of steps with the process engineering and to optimise their process. And this is where CPI came in. So when they came to us, they wanted to set up a line within our lab space. So basically, a test to see whether their process could work end to end and what the results were in terms of the extraction of the gold. And where we played a role was we helped them optimise and to understand what was happening at each stage of the process and get them to a point where it was commercially viable. So we've been helping them do that in our NetPart facility just outside Durham. During that process, other investors were starting to speak to them, and a member of our technical team flagged them to the CPI Enterprises team and suggested we have a look at them for investment because they were showing some real promise in the lab. So we were in a privileged position to be able to see the technology up close, and having worked with the team, we got those insights that are so important that Stephane mentioned, to be able to vet both the technology and how the team performed under pressure and did they understand how they were going to commercialise that process. So we were one of the early investors into Des Cycle. And as I mentioned, they're now at a point where they've raised their Series A. They've brought on board a number of strategic investors, and the British Growth Fund led their last round. Everquest had the opportunity to look at them as an investment very early on, and then the technical capability that CPI was bringing to the table helped endorse the technology to other investors, and that's crowded in interest from others, getting us to the point now where Des Cycle have just secured their Series A investment, and they're starting to bring on board a number of strategics with letters of intent in terms of commercialising their technology.
Well, that's a very good example of the end of the supply chain, so the recycling part. The beauty of the deep maketech is that it encompasses every single sector, from recyclable to consumer goods to defense, to automotive, to healthcare, basically. Basically, we've invested in most of these sectors. So to give you an idea of other investment we've made, our most recent one is in a company called Q5D. So Q5D has developed some robots to automatize the wiring of complex automotive like electric cars or plane. They've also invented a new ink which can convey electricity and some software to link the two. So basically, they can automatize the wiring of laying off wires as well as laying off some electric conveying painting, all at the same time in the same equipment. So you can imagine the incredible savings there are in manpower to do these kind of things. And as an example, the one company in Ukraine was employing 4,000 people to as an OEM to do the wiring for some electric car manufacturers. They had to move their plant in one of the Baltic countries, and now they're only employing 200 people with the Q5D machine to do the same.
That is both impressive and also everyone's worst fear. I think.
Yes, that's true. That's true. But so I think it illustrates very well that we are really looking for disruptive technologies that can disrupt the supply chain. And by doing so, you can transform an entire industry.
I think you mentioned supply chains raises one interesting question, with maybe a sort of side issue. If you're involved in manufacturing, how are you concerned about the sort of supply chains in your own companies, and how challenging is it to build good, solid supply chains in the current environment?
So it really depends on in which vertical you are. Mm-hmm. But of course, if you need to access critical minerals, like rare earth, for instance, that's really tricky at the moment. So same thing with semiconductors. I mean, the UK is heavily dependent on importing semiconductors, rare earth, energy. So if all of these are key components of the supply chain, you are massively exposed. So any new technologies that can allow you to depend less on these is critical for you.
And is that something that you think about at the time of investing, where you're sort of saying, okay, there's a vulnerability in supply chain here that we think about?
So the first thing we do when we look at an investment is how will we exit that investment? So, and that's where working with CPI is important for us, because knowing the market inside out allows us to know who are the 3, 4, 5 potential acquirer of that technology, and not in a theoretical fashion, but in real fashion. So when we do investment, we are going to talk to these people saying, if this technology was available today, is it something you would buy? Is it something you are likely to buy in 5 years? And usually, because we are in the supply chain, it's relatively easy to identify the bottlenecks, and therefore to know who are going to need those bottlenecks to be fulfilled. That's why we like that investment strategy.
Yeah. And I think one of the main investor concerns about manufacturing is capital intensity, and I think it's always something that people worry about is a case of, right, okay, I can do that little seed stage investment or even even a Series A, but somewhere about a Series B, C, or D, there's going to need to be a huge investment, and that may or may not be easy to get. How do you think about capital intensity when you're looking at these things?
So when we invest, we invest in enabling technologies that fulfill a gap. So that gap can be. So that technology can then be sold to the large corporation. So we don't necessarily have to go all the way to large-scale production.
Right.
There are some cases, this cycle being a very good one, when they want to develop their own plant because they feel that they will maximize value for investors if they control the plant themselves. So it takes about 15 million per plant. But most of this money comes from banks and very large family offices because the return on investment for those plants are very short. So within 18 months, the return on investment takes 18 months, basically. And that's a very attractive investment opportunity for a lot of the very large players.
And presumably that requires commercial contracts in place, some sort of pre-sales, that sort of thing.
Yeah, absolutely. So usually what they will do in the case of this cycle, they will strike a deal with the scrappers. And because they recover gold, they can sell easily gold on the market, especially at the current price. It's it's not very difficult.
Yes, $4,000 an ounce is
Exactly.
something Gordon Brown would be very jealous of, I'm sure.
Exactly.
For those with grey hair.
It would work even at half price. And when we did the investment, the price of gold was much lower than when it is today.
I think that comes back to what you were saying, Stephane, around having that really clear eye on the exit outcome and that being well defined, because one of the great things about DesCycle was that they were very early in developing a joint venture agreement with a waste plant up in the northeast. So you could see that awareness of the team bringing on board different partnerships to be able to, including the CPI technical resource, to be able to move them forward and in a capital efficient manner as well. So like really seeing the business model up close and understanding how they bring on partners is absolutely critical to our investment strategy, and getting comfortable with the team. That's an area where we do that deep dive and we get to a point where we understand where they need to get to with the commercial traction that Stephane referred to.
Yeah, I think getting partners, I think is challenging. Firstly, finding the right people who are willing to partner, but also I think you mentioned acquirers. Some acquirers, if you're linked with A, then party B may be less keen on because of that association.
Yeah, it depends really on the gap you are fulfilling. In this case, scrappers are really keen to have a stick in the game in the recyclers. So, for instance, DesCycle is in discussion with a large Japanese conglomerate who are currently using smelters to basically recycle their scrapping and are losing money with their smelters, which is why they are so keen to work with DesCycle, because it's a great opportunity to valorize, their waste effectively and participate in the value creation.
Yeah.
Just in terms of exit, my point about raising money relatively easily for each of the plants gives us each time an opportunity to do a partial exit because there is not liquidity available.
You mentioned about a capital exit. Is it maybe worth explaining how that might work in practice?
Right. So the idea would be whenever a big investment is coming into making a big plant, the idea would be to use some of this liquidity for the company to buy back shares.
So sort of effectively a secondary sale.
Exactly. And so we've agreed that with the company whenever we can. So we make sure that it will be acceptable.
How do you think about balancing that against future outcomes? I mean, there's always, in recent times, it's been nice to get any sort of return, I think. I mean, exits have been hard to come by, but at the same time, do you feel that there's a danger of giving away a bit of upside in the future if you do that?
So because we are an EIS fund, we are committing to exit within 5 years. So of course, you're right. There's always a trade-off between exiting too early and not making the most of a potential investment. In our case, we believe that unless the potential after 5 years is still for growth is still gigantic, we are probably better off sticking to our target, which is 5x in 5 years, basically.
Yeah, so presumably that involves getting a decent return in the first place.
Exactly.
So earlier you mentioned AI in passing, and I don't think any conversation today is complete without discussing AI a little bit. And I think we have this idea of AI being a very software-orientated virtual thing, whereas you're clearly very much in the real physical world. To what extent is AI influencing what you're doing and what you see your investments doing?
So most of the companies we are seeing have been using AI at one point to speed up their development. So they're not using AI to develop new things from scratch, basically, but they are using AI to speed up. So for instance, company developing a new material might be using AI to accelerate the fine-tuning of that material. So what we are seeing with those companies is that they are using AI to go faster to reach their optimal design or optimal material effectively. So it's more a matter of speeding up things than really changing the nature of what they are doing.
I suppose a practical example of that, and we've seen a couple of companies in this space as well, is the use of AI for drug development, for example. CPI's been using high throughput for a number of years, so to be able to test different variants and to do that quicker than you could if it was just a scientist in a lab with a test tube, that high throughput. And we were talking about big data 10, 15 years ago, in all honesty, but some of the leaps on from that are potentially in in that drug development space. And we've also seen it used in a diagnostic capacity as well. So quite a lot of companies using it as a pairing tool. So I think that's an interesting use case that we're starting to see. And as Stephane says, it's more how do you use that tool in the innovation space to come up with new ideas and ways of moving things forward.
Yeah, it's interesting what you mentioned there, because we had someone on a couple of years ago talking about AI drug discovery, and he was making the point that already there were so many candidate drugs as candidate substances being found. The problem was actually not so much finding new things. The problem was assessing them and developing them.
Yeah.
So it's interesting to hear that you're talking about it's not just the finding of these substances, it's the actual processes and that they're now starting to help.
Yeah, exactly right. So just to summarize for us, AI is not a must when we invest in companies. So we're not going to invest in company based on whether they've been using some AI tool or not, to be honest. Usually they will use AI to come with something slightly more advanced that they would have normally with the same amount of money, effectively. That in the future, that's not going to change. People might be able to design completely new material, for instance, just using AI. But I don't think we are there yet.
Yeah. Do you think that's in the near future or the far future, or how long do you think that's going to take?
Personally, I think it's in the quite distant future because I don't believe that AI can invent new things. I think they can optimize what is known already and bringing things from all over the place. But I'm still struggling to see it coming up with something radically new. Well, you talked about drug discovery. Yes, AI can design new drug to dock, non-targets and add to that structure some consideration regarding drugability, for instance. So from that point of view, it's a massive advancement because, you are combining 3 or 4 basic requirements in one. But they're not going to invent a completely radically new mechanism of action. It's going to very well be what exists already.
Right. Okay. Yeah. No, that makes sense. I understand the difference there. So yeah. So incremental. It might get a little bit of incremental progression, but that step change is beyond it at the moment.
I don't think a black swan would come from AI. Put it this way.
That's fair enough. So you mentioned sort of a couple of areas. What other areas are you seeing as hot at the moment?
Recycling is definitely hot.
Still, because I mean, my take of last year is that desire for ESG and interest in ESG has faded somewhat. But
so it could be that the interest from the investors about recycling might have phased out a little bit because now all the attention is towards AI anyway. So from that point of view, every other sectors are being poo-pooed. But what we are seeing is recycling is absolutely critical. There is, for the reason you mentioned before, Brian, there is a shortage of a lot of materials. Whether it's fluoric acid, whether it's rare earth, virtually there's a shortage of every single component at the moment. So anything which allow you to recycle those from land, for instance, is still extremely important. So for us, it's still a very, very hot area. And the investment model and the business model for those companies are very clear and tested as well. So from an investment standpoint, there are still very good investment opportunities.
I would agree with that. So in terms of what Stephane said, it's clear that you're finding a market need with that rare earths and the move up to electrification. It's very clear what the need is. Whereas sometimes we've seen technologies that trading off a green premium. I think you've got to work harder than that. I think some of the materials companies that we've seen, for example.
What do you mean by trading off a green premium?
Expecting to be able to sell product at a higher price because of its green credentials. I think for us to be able to invest, we need to see actually that the performance of the material is good, that it can be made at scale. It has to be beyond that, I think, now. I don't know, Stephane, would you agree with that? We've got a bioplastics company in the portfolio, for example, and the push really there is to get the performance and to be able to sell the material as a better option than that on the market, and not be able to just rely on the fact that it's got green credentials and sell it at a premium.
Yeah, absolutely right. It's really very much about what customers can see, can do with it, and at the price they are paying for it as well. We're not investing just because they are green. We are investing because they make sense from a commercial standpoint. And it transpires that being green is also being energy efficient, which means that you are less expensive, making things faster, stronger, and cheaper. And that's basically usually aligned with making it greener as well.
Yeah, I think that's something that people occasionally lose sight of a little bit. The green is not just something for the sake of it. It's actually, there is commercial value in there in some very simple ways.
Exactly. Cost of energy is super high at the moment. We don't know how long it's going to last that way. It could be for the very long term. Who knows? So any technologies that are energy efficient have a lovely future.
Well, I think energy demand, given what we're seeing in the AI build out, will remain very high. So even if energy supply increases, that doesn't necessarily mean prices are going to fall because the demand is actually just remaining high elsewhere.
Exactly. But we are seeing also some very interesting trend in the life science sector, especially in manufacturing components. And we've got an interesting company in the portfolio called Qkine, whereby they are manufacturing growth factors. The problem with growth factors is that they're expensive to make, and they're not that easy to harmonize. So there is variation when you're making them, and they've found a way to make these in a much better fashion than what exists out there. So it's not just being able to sell those growth factors a bit cheaper or better. By having access to cheaper and better growth factors, you can disrupt an entire industry. In this case, they could disrupt the organoid industry. So the way drug discovery is being made. At the moment, you are testing drugs for toxicity in animal model. But if you had access to small grown pieces of organs, that's what we call organoids, you could do the testing of your new drug on those organoids as opposed to animal model. And that could entirely disrupt a full industry. So I think it's a very good example of where a small improvement in the supply chain can have a very large effect on the entire supply chain and the entire industry itself.
Yeah. If you think of how many candidate drugs are going through that phase, and if you can...
Exactly right. Yeah. So that's the kind of opportunities that we are very angry for, because it's the enabling technologies changing the supply chain that can disrupt the industry itself. That's basically what we are after. I mean, if you like, the most beautiful example we can find out there is Tesla. So Tesla, they haven't invented electric cars, but what they've done is to master the battery supply chain. So they basically manufactured the battery themselves. And on top of that, they've engineered those batteries to fit super fast chargers effectively, which makes it a must-have basically for the entire industry. So by disrupting the supply chain of the battery, they've disrupted the electric car industry.
Yeah,
that's what we are trying to achieve here.
That's a very interesting perspective. And if any of your companies have even a fraction of the success of Tesla, then you'll be doing outstandingly well.
Indeed. That's the idea.
What I'd like to do now is turn to our favorite questions. So we will put these to you and get your thoughts. So what was the most recent publicly announced investment that you made, and why did you make it?
So the latest one is Q5D. And we made that investment because being able to use robots to electrify cars and planes can disrupt that industry by making it much cheaper.
So in the classic VC triumvirate of market, product and management, we know that they're all very important, but which is the most important for you?
So the obvious answer is management. Without management, you don't have any. You don't have anything. You can have the best technology; it will stay on the shelf if you don't have someone to sell it or to develop it.
That's interesting. I did want to give you a background if product might figure in there as a competitor, but
product is what we invest in, but management is what we back.
That's a very, very nice way of putting it. So tell us about the time you failed and what you learned from it.
I've been an investor for the best part of the last 20 years, basically. So I've invested in a lot of companies and I got a few successes and a few failures as well, and usually for very different reasons. But the one that springs to mind just now is a company I invested into, which was an enabling technology for the sequencing market. And when we invested in the company, the cost of sequencing a genome was about $100,000. By the time we completed the development of the platform, the cost of sequencing a genome was $10K, and fast approaching $1K. So all need for prepping those samples to make them sequence better became very moot. That was an example of a kind of a black swan event, which had such a profound impact on the company that it was almost irretrievable, basically. So I would say the lesson here was really to assess what could go wrong in the market and basically see the impact of this, and maybe sometimes the impact of something which could happen is too high and you should therefore avoid investing.
How hard do you think that is to assess? I mean, in that example you gave, was it foreseeable that the price of genome sequencing would come down so quickly?
We've invested in a company started by a Nobel Prize winner, and that might have been something which blindfolded us a little bit. And that's the other, I think, biggest mistake investors can make is to invest into technologies looking for a market, as I was saying before. Rather than looking for a solid unmet need voted by the market and making sure that company can plug the gap within relatively quickly, so that you don't give time for that one to come into.
Hannah, I think you were volunteered to be next.
Yeah, can't get past the question. I think life's always ups and downs, and it's fair to say that we've been operating in a really volatile environment. When you look at some of the past events, COVID, Brexit, another Trump administration, I think the last couple of years have probably taught me don't be surprised at anything, quite honestly, and be very open to what comes your way. I think the real key lesson for me is how you respond to it. It's the resilience and the openness and the ability to learn from past things and take them forwards that I think I've really started to appreciate as I've got more experienced. And given the volatile situation we've been in, I think it's fair to say that, it's not been an easy couple of years in many industries, and we've seen highs and lows across the sectors that we've supported. So I think just being realistic around where you are and learning from those past things, but not closing yourself off to the opportunity. That's why it's great working with such an experienced investment team and tapping into CPI, because it allows you that ability to look beyond where you are and to always constantly have one eye on the future. Yeah, never a dull moment. It does feel like it has been a very volatile situation that we've been working under. But I think it's the response and the resilience and the teaching from it that I'm really taking away with me at the minute.
Be prepared for a roller coaster ride at times on
without a doubt.
Everything. There's some things I kind of stopped watching a little bit because just of my sanity.
Yep.
As regular listeners know, I'm an avid reader, always looking out for new ideas. Are any books out there you like and would recommend?
Oh, I've got a good one on that one, actually, Brian. And I think it really epitomises our investment strategy. So there's a book out there called The Medici Effect. I think it's Franz Johansson. I think I picked it up off the back of a talk somebody from Amazon was giving around Alexa and how that came to being. And for me, it was that idea of a variety of different disciplines coming together and producing something different that's outside the general vertical. So an example within the book was the use of what you see in nature and then applying it to architecture. So there was an example of a building that had been built like a termite mound to be able to use the cooling properties of that within the building without over-engineering an aircon system. I just thought it was a great example, and it had various different things in the book that really showed what can happen when you bring two completely different ideas and disciplines together and produce something new. So definitely a great book to listen to in the car or to pick up when you've got 10 minutes.
I shall maybe, that's one's completely new to me, so I shall definitely be checking up on it. You got any suggestions, Stephane?
Yeah, I've got a book written by a friend of mine, actually, called Welcome to the War Economy. The guy is called David Bavray. As an investor, he used to have a huge fund here in the UK. One day decided to return all the money because he wanted to understand the effect that China was going to have on the economy. 15 years later, he was still living in China and starting to write books about the way China was developing and affecting the world. And that is his latest one. And he's really talking about the complete U-turn that China has had just post-COVID, when I think it was the 20th Communist Congress. They decided to tighten the Communist Party grip on the economy and basically turn an offer to a demand economy to an offer economy, whereby they were going to now control the production and production line. And that had the ripple effect, which we are now seeing on the entire world about the control of supply chain. So it's a beautiful book from that point of view because it explains exactly the sequence of the economy.
Well, that sounds interesting as well. Another new one to me. Excellent. So, good start to the year with these. So, if anyone wants to find out more about what you're doing at Everquest, where should they go?
So they can go on our website and we'll understand exactly what we're doing. We are also available to talk to people, whether it's people with great investment idea or co-investors or investors wanting to invest into our EIS fund. We are open for business at the moment. So it would be a pleasure.
We shall post links to all of those in the show notes. So Stephane, Hannah, thank you very much for coming on the podcast today. It's been great chatting with you.
Thanks, Brian.
Thank you, Brian.
I hope you enjoyed the conversation with Stephane and Hannah. Manufacturing should provide plenty of opportunities for investors in the future, so it's great to hear someone is making the most of it. As usual, you can get full show notes with links at harmonandco.com/podcast. You can subscribe to the podcast on all good podcast services and players or through the link in the show notes. If you like what you hear, then please tell a friend or colleague or give us a review on your favourite podcast app. Thanks for listening, and we'll be back in 2 weeks' time.